Well, welcome everyone. Welcome to our power scanning session. It is February the 21st, 2026. And once again, we will be on the lookout for the most interesting swing trading setups for the week and the week ahead. My name is Daniel, and I will be your moderator throughout the session. And I'm greeting you once again today from our beautiful office here in downtown Montreal in Canada. A beautiful, cold winter day with blue skies. I didn't walk to the office today. I took my car because I have an appointment right after the session. And anyways, where are you guys calling in from? Who do we have in the room today? Please put your location into the Q&A box. All right. So we have Lenny from New York City telling us there is mixed weather conditions in New York with a storm coming. All right. Well, I hope you are well sheltered in New York. Keith from Scotland. Hey, Keith, how are you? Nice to have you. Edda from Hamburg. Hey, Edda. Good to see you again. Frank from Den Haag. How are the Netherlands, Frank, these days? Werner from Frankfurt. He says Frankfurt as usual. What's usual in Frankfurt? Is it the usual location or the usual weather, as you may have? And yeah, Robert from Bavaria. He says Servus, as we say or as they say in Bavaria. Fabian from Hannover. Hey, Fabian, how's it going? Daryl from San Francisco. Daryl, I really appreciate you calling or dialing in so early in your morning. It must be well, it is 9 a.m. in San Francisco right now. Aubrey from lovely and sunny Cyprus. Great. I'm glad to hear this. That the weather has picked up in Cyprus again. I heard that most people in Cyprus actually don't have heating in their apartments, and it can actually get quite cold during the winter months. So maybe, yeah, hopefully it's getting a bit warmer down there for you. And Terry from Colorado. Perfect. Well, thanks guys so much for sharing your location. Let's get into it. What? We all have heating? That's not everyone. I talked to a friend of mine, Martin Gersch. I think the Germans among you guys will know Martin. He's a well-known trader in Germany. He lives now in Cyprus, and he told me he has no heating. Anyways, maybe some people don't have it. Who knows? All right. Uh, yeah, okay. AC with heating and cooling. Yeah, I have that too actually here in Montreal, but I guess whatever. It's a different topic. Let's get into it. Okay, so once again today we will be looking for swing trades, and a swing trade, give or take, takes between 1 and 20 weeks. And why do I say this? Well, not because we're really stiffless about the duration, but just to make clear, what we will be talking today is not in the day trading space. So we're not going to be looking for opening trades on the same day and closing them as well, and also not necessarily for super long-term investments. So right in the middle between these two extremes. And we actually coined this the 13-minute strategy. The duration is not really important, but what's important is that this is something you can do once the market closes within just a couple of minutes. So we scheduled this session for 1 hour, but if I wouldn't be talking so much, this is actually a really quick scanning process, as you will see today. So we designed it this way because the idea is that, once the market closes or perhaps before it opens, you open up your computer, you open up the dashboard, and you just run your scans, and you pick within a couple of minutes the trades or the setups and the symbols which may become interesting right now. And then once the market opens, you just, see where the market opened and you execute your trades. Yeah. So this is something to avoid having what we call analysis paralysis, because you get your setups displayed to you very quickly. And I'm just going to focus on these ones. All right. So now who are we actually? Who is this person talking about, analysis paralysis and how to avoid it, about the markets and swing trading? Well, my name is Daniel, and I'm one of the founders of tradingindicators.com. We have founded Trading Indicators, I'm going to say we, Homa and I, Homa here in the middle, about 10 years ago. And about 5 years ago, Nicholas has joined us here on the right-hand side. And Nicholas is also in the room today, and he will be looking out for your questions. And as our name suggests, we specialize on the creation of innovative trading indicators. We've been doing this for many, many years for clients all over the world. But in the last couple of years, we also, spread out a little bit, and we have developed what we call trading scanners. And especially in the stock space and ETF space, a trading scanner is really valuable because there you have thousands of symbols which potentially have interesting setups, but it's not really practical to go through these one by one manually. It would take way too long. This is why a scanner becomes handy, because you can scan within seconds or maybe split seconds even for those symbols which currently have interesting setups coming up. All right. So with this being said, one last thing. If you have any questions, don't be shy. Put your questions into the Q&A box, and Niklas will bring those to my attention as he sees fit. And also, I do need to remind you that trading does contain risk and therefore is not suited for every investor. If you trade, make sure to only use risk capital, which is money that you actually can't afford to lose. When it comes to backtest performance or hypothetical performance or really anything based on historical data, keep in mind that this is not necessarily indicative of future performance, and any trade ideas and strategies discussed in this webinar should not be construed as trade advice. These are for educational purposes only. All right, before we get into the markets, a couple of housekeeping items. First off, what we will be doing today is to interactively scan for setups using our Liquidity View dashboard, which is our trade scanner. It would be best if you followed along, which would be the most hands-on experience. But of course, for this, you would need to have access to our dashboard first. Most of you have access, but for those of you who perhaps don't have access yet, you can sign up for a free trial for 1 week simply by using this link below. And Niklas, please put this link into the chat box, please. It's tradingindicators.com/view to be able to sign up for a 1 week free trial for our dashboard. So Niklas at tradingindicators.com/view for this. Also, yeah, we actually have a bootcamp available for our dashboard, which is available at tradingindicators.com/bootcamp. You can watch it already right now, but we are most likely this week on Thursday will be re-recording this bootcamp in a live session. So announcements will be made early next week if this actually will take place. Why are we doing this? Because we have introduced in the last couple of weeks and months a bunch of new features which are not covered by this bootcamp yet, because we recorded this one a couple of months ago. This is why we will be re-recording it, and of course you will all be invited to join this live bootcamp. Announcements will be made a bit later this week. We also have a Discord channel. Check it out at tradingindicators.com/Discord. We mainly post day trading setups in that channel, but every once in a while we also posting swing trades there as well. So it's tradingindicators.com/Discord. There's an ebook available about the most popular setups, which are the bounce setup, the zone break setup, and the zone break retrace setup, available at tradingindicators.com/power of three. Power of three is the title of this ebook. And lastly, if you have any feedback, please don't be shy. Put your feedback into the Q&A boxes. These could be symbol requests or new scans or new filters or really anything which you may think could be useful for the dashboard. We take every single piece of feedback and advice into account, and we will use it to further improve the dashboard. So please don't be shy. Don't hold back. All right. With this, let's get started with the market review and with a review of our trade ideas from last week. So I'm going to start with the market review. For this, I'm going to switch over to the dashboard. If I can find it, there we go. And let's start with the SPY. All right, the ETF that tracks the S&P 500. And what's interesting here, before we even look at the chart, look what it says in the scanner here. Short bounce. Okay, so short bounce means we must be near a resistance level. Let's see what we actually can see on the dashboard. So here, what do we see? Well, prices indeed are exactly at this resistance level. Now, this level has been broken and passed on a couple of times in the past. I'm not sure how significant it still is, but what's definitely a fact is that we just completed a level 4 pullback. Just on the last trading day, like on Friday, we had a very bullish day on Friday. This level 4 pullback, 1, 2, 3, 4 levels down, has been completed. And now, if history, repeats itself, this could be the beginning of a bit of a bullish cycle. And I believe, well, we'll see what's going to happen. There's been some political news coming out over the weekend already. I believe we may see prices pushing a bit higher, but I think we're not out of the woods yet, because this, sideways consolidation zone we're in right now, pretty much since back here in, when was it? In October 2025, more or less, we are struggling a little bit with this upper level here of 690. Prices have been bouncing above and below of this level quite a few times. But yeah, we'll see if this can be broken. I'm a bit skeptical, but we'll see what's going to happen on Monday when the market opens. But just perhaps I would at least not go long right now at this level because we are at this resistance level and we've been bouncing quite a lot, yeah, back and forth, yeah, at this level here. All right, so let's go to the QQQ. What's going on there? The Nasdaq 100 ETF. All right, so here it's a bit different. We are definitely further away from this key resistance level here at 629. We're at 608, about 20 points away. It was also a bullish day on Friday. We're slowly, getting rid of this level 4 pullback. Not as strong as in the SPY, but also here I am bullish, but entering right now, I would probably wait. Perhaps we're gonna see another pullback here to this second MA rush level and then go long, or just see once we break above this pattern here. So, be sitting on the sidelines a little bit, especially for all this political news coming out right now. Perhaps better to just wait and see what's going to be going on here. But of course, also in the QQQ, we are certainly bullish. Russell 2000 is our next symbol to consider. Here we just completed. We just are coming off a beautiful zone break retrace setup. If you look at what we draw on here a couple of weeks ago, you see this little rectangle here. This was our classic zone break retrace setup. We broke above this resistance level here at 252, pushed up, then the retracement, the correction down to this level, and look at this nice bounce off this level here. Very nicely complete, but also here now I would be probably waiting to see what's going to be happening next as we are approaching this resistance level up here. So if you're not in this trade yet, perhaps it's a bit too late now. Think about potentially even booking some profits because we are nearing this resistance level and we may see another bounce off this level here in the Russell. What about gold and silver? GLD, first gold, the ETF that tracks the gold prices. Well, um, also here we had, of course, this big correction here, almost 20% correction as all the big metals have dropped a lot. But what is remarkable, and I discussed this in my webinar right before this to our German clients, is look what we can see here in Trend Radar. We have to go back all the way up until like October 2023, which is when we had more than just a level 4 pullback. Here we had level 5. Before this, it was been only level 4 pullback in gold. And remarkably, even this big drop in gold was just a level 3 pullback, which was almost, well, very quickly bought up. Then we came down again, another level 3 pullback, which was immediately bought up. And now we're pushing higher. Very bullish day on Friday. I believe we may see higher levels in gold as we proceed into next week and the week afterwards. I'm quite bullish here in gold. I actually sold some puts when we had this level 3 pullback here, anticipating the volatility was quite high, so these puts were reasonably expensive. A nice time to sell them, and the anticipation is that prices will continue to grind higher, and these puts will lose on value. As prices go higher, we are getting closer to expiration, and potentially the volatility will also go down. 3 factors in my favor in this case to sell or to buy back these puts for a profit. Silver, SLV. Well, I'm a bit less bullish in silver. I'm going to explain to you why, because even though we've come off this low point here, but definitely not as strongly as in gold. So in gold, we almost regained 50% of the losses we had after this big correction. In silver, this is not the case. So if I was to measure what we have regained, first of all, we can see that we lost basically 40%, and the stuff that we've regained this week was only, going back to my measuring device here, only 10%. So we're still 30% down, give or take, from the high. So we regained 10%. Not as much in gold. And here, silver was so overbought. It was so expensive. Of course, the drop was much higher. It may take here a bit longer for these levels to be regained, if ever. So I'm slightly more cautious of what may be going on in silver. In all honesty, I still have my short puts in silver, which I bought, I think, on this day here where volatility was extremely high. These ones are on plus right now. They're nicely gained some value. They brought 35%. in the positive. I will be holding on to them, but probably get rid of them once they hit 50 or 60%. Definitely going to keep a close eye on this trade. All right, what about oil? The USO, the United States Oil Fund. Well, it's getting more and more interesting. It already says short bounce here in our scanner. We're not there yet where I want it to be, but nonetheless, look at where we're getting up against. Our magical level that we've discussed for so many years now in our webinars, scanning webinars, we are coming up once again to the 83 price level. We're not there yet, but we're nearby. And I would be very excited to see if prices can push higher next week once again. And then, depending on what the market conditions are, I might be looking for a short trade here in the US. So I will not pull the trigger yet. We saw it here happening before. So this level has been tested like here on July 2025. We bounced sharply. I will, as you know me, wait patiently to get the best possible setup all the way up here. And then I might be looking for some shorts. So please stay tuned for this. It's going to be something exciting to look at next week. All right. So that was oil. And then we have one more, which is Bitcoin. I think Bitcoin is the hardest to read right now. We argued, and you can see it here in our dashboard, we argued that, oops, one second, that this low point here at 60,000, let me actually remove quickly the FIB level here, that this low point at around 60,000 could have been the end of this ABC correction. You can see it here. What do I mean by ABC? I meant that we came up all the way up to this high point, and then we had A down, B up a little bit, and C another leg down correction. And then this, well, this is from a technical analysis point of view, might be the end of this overall correction from the highs here. And if that's the case, then yeah, one could argue the 60,000 level, which coincides with the 61.8 FIB retracement level, could be the end of this retracement. I'll be very happy for this because I added to my position at around 68,000 to Bitcoin, anticipating eventually this overarching uptrend is to resume. But I think the verdict is not out yet. It could be that we are dropping all the way down as far as this level here at 50,000, 49,000. This would be the next key technical level on the chart, but we have to wait and see. All right, so these were the levels that the symbols that I would like to review for the market review. And then the next thing I want to do is I want to look at the trade that we picked last week. So I'm going to go to my watch list here, down to our weekly swing trades, and let's see what happened. We had AutoNation. AutoNation went down to key support here, and it's still hovering in the same area here. Here, really nothing happened. So plus minus zero at AutoNation. All right, no harm, no foul at AutoNation. Citigroup, nice trade here. We bounced beautifully off this key support level. You can see it here. We came up and now we're trading in the middle, in between support and resistance. This one is working out. This was also our trade of the week in our newsletter, by the way. So Niklas picked this one on Monday. So Niklas, kudos for picking this one as I was busy. The Corporación América Airports, also here, beautiful bounce off this key support level. Worked out nicely. So everything is fine here. Celestica. We discussed this trade in length in our Lunch and Learn session, which was on Tuesday. Of course, the market only opened on Tuesday for potentially a stock for selling some puts, because puts are expensive. You can see here the heat index, which is an options pricing index, was back then at around 10. Now it's a bit lower at 8.42, meaning options are expensive. I think about 8 is considered to be expensive, and more. And an option selling strategy is more interesting in those cases, as we want to sell high and buy back lower. You may have cases like this one here, 1.86, where it might make more sense to buy options. So yeah, that worked out nicely here, and a nice bounce off this key support level. EWI, the MSCI Italy ETF. Yeah, you can see it here. Italy, of course, hosting the Olympics right now. For a big final hockey game tomorrow, USA against Canada. Very excited to watch this one. And nonetheless, also here we saw a nice bounce off this from our resistance level. Prices pushing higher. LTL Pro shares, also here a nice bounce. Things worked out nicely. Steel Dynamics, this one is, just hanging in there. I believe you're going to fill this gap here at some point. this gap here all the way up to the 199 200s level. So this is yet to be filled, but definitely a bullish setup here. Motley Fool 100 index, also a nice bounce here. And finally, UniCredit SPA, also here a nice bounce off this level. So overall, I think this was a pretty good performance. Let's see if we can repeat it next week, this week once again. All right. So let me quickly see if there are any questions. Oh, Lenny says you can't see the pattern that came to for my zone break retrace there. Let's check it out. For the Russell IWM. Real quick, Lenny. This box, where did it go? Oh, here I am hiding my drawings. This box here. Well, the setup here was the zone break retrace setup. It just came down to this green line here. That was my the pattern here. Zone break above resistance, retrace it back to the resistance level. This was my projected entry area. That's it.
Two questions here, Daniel.
Yeah.
And anonymous, I'm not sure which symbol that was posted about. Elliott waves, maybe a bigger wave 3 beginning. What symbol do you think this was in reference to, Daniel?
Maybe Bitcoin. Yeah, well, I think for if you look at Bitcoin, this is the correction in the bigger uptrend. So let me just hide these drawings real quick. That's at least my take on it. So here, what we see, the uptrend start from down here. You can potentially count 5 waves up somehow. I mean, Elliott wave is very subjective, and then we have a 3-wave ABC correction before we see another push higher. At least that's the way I read it. But as I said, Bitcoin is very hard to read right now.
Two questions here. Do you think Citigroup is going to continue to go up?
Well,
We'll have to wait and see, I guess.
I guess we have to. Yeah, these are. Where is it? Where did Citigroup? Real quick. Just gonna go through this real quick. Is Citigroup? I mean, yeah, I think so. I mean, this trade definitely still has some room left all the way up to this resistance level. So I think target of 120, 121 could be reasonable.
Okay, and then the next one is CLS. Long target is 331.5, but
Yeah.
on Thursday, or was that Thursday? No, Wednesday, price dropped. What tool would you use to know that approximately $300 a share was a good selling point on the 18th?
Oh, I don't know. I didn't see it. I mean, these moves back and down, they happen all the time. Just need to be factored in. Nothing will ever go up in a straight line. So I mean, if you sell puts, for example, if you put at least 50% in the money, I would think about potentially buying them back already. If you're in this trade with just a regular stock trade, then I mean, I probably would scale out of it once we hit the half point between these two levels here, just because there can be some back and forth, and it's never wrong to ring the register. Just book some profits and then keep the rest right until we hit the resistance up here.
Thank you. And the last question, could you please look at USO?
Oh, we
And
just did.
oh, you just did? No, the question was, do you think wave 3 is beginning?
Oh, I don't see any Elliott wave related stuff in the United States All Fund. I think here it's a clear sideways pattern in my view. Look at this one here, where the drawings. So no, I'm not the biggest believer in Elliott wave, to tell you the truth. I believe that there are trends in which there are corrections following, and you can count them in any way. But here the trend is clearly sideways, and I also know that sideways consolidations can go on for a very long time. And under this premise, if you think, hey, this might continue to go on longer, then once we get up to the extreme of such a sideways channel, this could be an interesting moment to short. That is more my rationale here.
Thanks, Daniel.
All right, cool. So back to my slides now, because now we're going to start looking for interesting setups for the next week, because that's what we're all here for. What could be of interest? So what we're going to be doing is we're going to we'll be looking for long setups today. We mostly look for long setups. Why? Because the majority of the stock market has an upside bias, and I want to take advantage of this bias to the upside. That's why we like to trade stocks and ETFs typically to the upside. But of course, there are a couple of conditions that need to come together. First off, since you want to trade to the bullish side, we prefer our symbol to be already in a bullish trend, ideally in a long-term bullish trend. That's a precondition. Then we're just going to look for trend entries. But a trend entry, that's a bit tricky. It's not as straightforward as you may think because there are good moments to enter into a trend and not so good moments. And one, not so good moment, for example, is to enter when prices are very extreme, very far away from our averages. For example, here you can see this little greenish line on the chart. These are our average pricings. And if the current price is very far away from these averages, then things are very expensive. Well, this is not where I want to enter. I want to enter when things are coming down towards our averages here, which would also register on our trend radar indicator as a level 3 or level 4 pullback. We call these a healthy pullback. And there's a reason for this, because of course, we are looking for a pullback, but a healthy pullback to us is really a pullback in the sweet spot. So it should be significant, but not too big. So what do I mean by this? So I'm going to go one more time back to our SPY here just to give you what I mean as a sweet spot. So, all right. So here we can see in the SPY, we go back here a little bit. We had a bunch of level 3 and level 4 pullbacks here, just in the sweet spot where prices are coming down a bit, but not to a crazy extreme. So all these were great moments to enter. But what I would consider potentially a very deep pullback, which I don't like to trade, because in that case, maybe we see a full trend reversal. Is something like this. You can see it here. The SPY during the tariff discussions dropped quite a bit, and we went all red here on trend radar. This, of course, is no longer a healthy pullback. That's a significant pullback. And of course, you could have said, oh, perfect, even better. But the way I look at it, if we have these deep pullbacks, the danger of having a complete trend reversal or an even deeper pullback are elevated. This is why I prefer these ones here, these level 3, level 4 pullbacks right in the middle, right in the sweets, because there, I think the chances of having a bounce from a key level are higher. All right, so this is what we call a healthy level, a healthy pullback. All right, and ideally then, we want this pullback to coincide with a key technical level, which could either be a support level, as we can see it here, this little reddish line, or it could be a former resistance level. For example, here on this symbol, we broke above resistance, and then we came back to this former and old resistance level, which at this point, however, will serve as support. Resistance can become support when broken, and oftentimes this can be a launchpad for another leg higher afterwards. So this is what we're looking for today. So how can we do this? Well, back to the dashboard. I'm going to go back to our all symbol scanner. You can see we are scanning right now through 5,741 symbols. So quite a few. And we're constantly adding symbols on request. So if you guys have any symbols to be added, of course, we always double check them to make sure they are reasonably liquid and reasonable to trade, but if they fit our criteria, we are happy to add them. So don't be shy for this one. All right. So first criteria is we want to be in a long-term uptrend. And for this, we're going to use our MA rush indicator. This indicator here, which draws, I can see it here, these bullish or bearish labels onto your chart. And depending on what the last label on the chart is, this gives us our current trend direction. So in this case, our current trend is bullish because that's the last label on this chart. So how can we find symbols which are currently bullish? Well, very easy. We're going to go to our MA rush column here and go down to either any of these bull filters here. And the one I like to use is this one here, bull signal greater than 500. This is something we recently changed here in the dashboard. What this basically does is it finds all the bullish, actually, let me just contrast this. First of all, let me just go to bullish here. Sorry, 1 second. So if I just click bullish, the filter will find me all these symbols which are currently bullish, regardless of the trend duration. So for example, here for Agilent, if I click on this one, Agilent Technology, you can see we went bullish quite recently. A couple of weeks or months ago, exactly 84 trading days ago. This is when we went bullish. To me, a little bit too soon, a little bit too short. I like my uptrend to be as long-term as possible. This is why I actually will change this filter to bull signal greater than 500, meaning the last bull signal occurred more than 500 trading days ago, more than 500 candles ago. I'm going to click on this. Once I do this, you can see that, now every number next to my upwards facing arrow here, which is the trend duration, is now greater than 500. And if you look down to our filter here, we can see that of our 5,700 symbols, more than 800 actually are in a long-term uptrend. That's quite astonishing. So that's a lot of symbols which are in a well-established long-term uptrend. So it's a really big universe of symbols we can look for setups for. That was just the first step. Step number two is we want, actually, let me just find you a very crazy example. Like, unlike this one here, we want our symbol to be in a healthy pullback state. So is this one here in the healthy pullback? Even though we came down a little bit, no. If you look at trend radar, the very last column here, it's all green. That means that one is not in a healthy pullback state. So here we are a bit too expensive. It may come down again, and then it becomes interesting again, but this one right now is not in a healthy pullback state. But what we can do is we can actually find ones, like this one here, A2A. Let's check this one out. Here we can see level 4 pullback. That's something that's more of interest for us, because here we came down significantly. And if you look here at this column in our scanner, you see it's called pullback, and it has a number here. And what we will be looking for is a green number, which looks for a bullish setup with the value of 4 or 3. That means level 3 or level 4 bullish pullback. If you go to our filter here, we can select those two levels. So bullish, bull, level 3 or level 4. We can see once I do this, only 71 symbols now qualify for the setup. So now we really already filtered down quite a bit. Right, this is a very strict criteria. Perfect. All right. So that was criteria number 2. And criteria number 3 is we want this pullback to coincide with a key technical level. Would this one qualify here? Not quite. Even though we came down quite close to the support level down here, we're not near enough yet. So for this to qualify, I want prices to come down even closer to the support level. So how can we find symbols which are actually that close to the support? Well, we're going to go to our Liquidity IQ column here and select long bounce. And that you can see now, wow, only 3 qualified so far, like Rave Restaurant Group. You can see now level 4 pullback right at support. And that's one way we can bounce to the upside. Another way we could bounce off is if we're coming down from higher price levels towards a former resistance level. We call this one the zone break retrace setup. So this one we can add to our mix by going down to our filter here one more time and also selecting long break retrace. I click on it, and now we're adding these setups here as well. Now we have 7 setups to look for. All right, perfect. Now I do one last thing. I sort by trend duration. The first one that comes up is this one here, the Northeast Bank long break retrace setup as of late. Let me just make this a bit bigger. And where are we coming in from here? Because like most banks, also Northeast has lost a bit of steam as of late. We're coming down all the way from 126 to 116 here. But nonetheless, we are coming down to this former resistance level. And I like it. I'm going to add this symbol to our watch list for next week. Whether we're going to take it, we'll see. But I like the fact that we're coming down to this former resistance level. So I'm going to add this one to our watch list. I'm going to go to my watch list here. And first of all, I'm going to create a new watch list for today. So weekly swing trades column 2026, February the 21st. I'm going to create it, and I will add Northeast to this list. Done. Perfect. Edit. And I do one more thing. I will now also share this watch list with you guys so you can have it for your reference. And I will unshare the watch list from January the 17th because that one, went out of scope a little bit by now. Okay, done. First one added to the group. Next one, Rave Restaurants in a long bounce setup. We just had it. All right, so what do we see here? Well, it's a very jaggedy symbol. Look how it goes back and forth. I'm a bit torn. Let me just go back a little bit further. I'm a bit torn of whether this could be something of interest here. Bullish since August 2022. We're in an uptrend, but these corrections here, they seem to be a bit too big for my taste. I'm going to skip this one. I think when we see a bigger move down, perhaps to this support level here. So bit of this range also is very tight between 3 and 336. I'm going to skip this one. A little bit too sideways to zigzagging for me. All right, next one, Walmart. Walmart is interesting. Zone break retrace set up with, yes, look at this one here, a beautiful down gap. See this little gap here? This happens from Thursday to Friday, bit of a down gap. And of course, Walmart, just like most retailers, have seen a big push lately, but now they're coming down a bit, and I think they're coming down perhaps a bit further down to this level here. And this could be a really interesting long entry opportunity. I probably would put my stop loss not just below this level, but potentially below this level here. Just give this trade a bit more room because Walmart, first of all, is probably the biggest player in the retail space and has been in the very established uptrend, but bigger corrections are possible. You can see these ones here. So I would give this trade a bit more room if I took that trade. What's interesting here is that if we look at the heat index, it's at 4.35. So the heat index is an indication of how expensive or how cheap options prices are right now. It's a calculated value, it's a synthetic value, as you may call it. It doesn't really, there's no option to actually cost this much right now. It's something we calculate by taking the current close price, which is 122.99, and an options expiration of exactly 30 days. And then we are synthetically calculating what would be the options price exactly 30 days out with a strike price of 122.99, exactly 122.99. Of course, this doesn't exist. That's why it's a calculated value, but nonetheless, it gives you an indication of how expensive, how cheap options are. And just to give you the scale, I would consider options below 3, this is a percentage value, as very cheap, and options above 8 or 9 as expensive. So this one would be more on the cheaper side, and potentially here something you might consider with buying call options, or any options buying strategy could be of interest here for Walmart. So I'm going to add Walmart to our list. I like this setup. Perfect. Eurocat, I'm gonna not talk about this much more, but you can see here also here we are long-term bullish. Now coming back to key support. If you're an FX trader, maybe looking for longs is not be the worst idea at this price, but we're gonna skip it for now. Brady Corporation, long break retrace. Also interesting. This is a cool setup. A nice push higher off after the break of resistance here, and now the retracement down to this level. Of course, also here I probably would wait for price to come down just a bit further, maybe a level 4 pullback on trend radar. Right now it's a level 3 pullback here. You can see it, and then this could be a really interesting long opportunity. Yeah, definitely something for next week. Adding it. And just an ETF for, let me just see, the retail sector. Yeah, retail has been pushing up as one of the strongest sectors since the beginning of the year. Coming down a little bit now, but also this one here is coming down to the former resistance level, which might be and lead to another push higher. And if you look at the history here, because this is a sector ETF, it doesn't move that much. It's just very small movements here, considering. But nonetheless, it could be something of interest to look for a long position here if prices coming down to this former resistance level here once again. So I'm going to add this one as well to our list. And one last, the Rhythm Pharmaceuticals. Yeah, let's have a look. Even though farmers are always a bit hard to read because lots of things can happening here, and we have earnings coming up. Oh yeah, I saw this one before as well when I had the webinar for our German community. Huge options prices at 9.5. Very expensive right now. You may not think it should be expensive right now because prices have been very trading with very little volatility. But the reason, of course, is this one here. Earnings coming up on February the 27th. And of course, that volatility, which is associated with these earnings, that's already priced into the options right now. High options premium. And if you believe in this company, yeah, maybe I think some puts potentially could not be a bad idea. But of course, going into earnings and holding a position is always a bit of a gamble because you never really know what may be announced in these earnings. I'm going to skip this one for our watch list because this is a big question mark here. All right, so we have a couple of nice looks here, but what I also like to do because sometimes having the requirement of having a healthy pullback, level 3 or level 4 as per trend radar, is sometimes a bit too stringent. So let me just take off this requirement to see what else we have. I'm going to go here to our filter and remove this one. I'll keep the other filters the way they are, but I'm going to remove this one. And the first one we're going to see here is an MSCI kind of oh, not available. Okay. Oh, no, this one I'm not going to trade with this crazy bar here, so I'm going to skip this one. But let's go here to the next one here. Alternation. That actually was on our list last week already. You can see it here. And prices are kind of hovering around this support level. I'm not going to re-edit now. We already had it last week, but I still think for sure it has a bullish bias. Whether we're going to bounce off this level, we'll see. Maybe we're going to go down one more level to 187 here. This remains to be seen. Of course, we had this on our list last time. It didn't really move much to the direction. So ideally, I'd like to see the bounce happen right away. So it's a bit less attractive to me right now. So I'm going to skip it for today. Northeast Bank we had. The Sanmina Corporation. What's going on here? All right. So Sanmina Corporation, huge gap down here. Long-term uptrend. Let me just go back a little bit further. Where are we coming from? Yeah, nice uptrend. After a big down gap, let me just quickly note this one for you. You can see it here, big gap down. Also here, heading into earnings on March 11, not too bad. And here we can see the bounce that we wanted to see. It already has happened a little bit with very small moves upwards. It's just it's not very convincing of where we're coming from, even though we're grinding higher. I mean, if you're coming down perhaps a little bit closer, this could be an interesting trade, but price moves are not as attractive as I would imagine. So I'll keep it it's a judgment call. I'm gonna skip this one also for our list. Griffin Corporation. All right. Zombig retrace here. All right. I'm gonna skip this one too because it's just these moves are quite big along the way, and I am not so convinced that this is going to be the end of this retracement. We might come even a bit further to this level here, or maybe even more. Because if we have two levels next to each other, oftentimes it's the second level, which is a stronger one. So I'm going to skip this one as well. Yeah, see, sometimes it's good to be selective. Rave, we had Walmart, we had Trip.com. Let's check this one out. That one lost a lot of yeah, value since the all-time highs here at around 78, now down to 54. Big retrace, and we're coming down to this key level down here at around 51. Could be a value play if you believe in this company. I've booked a couple of vacations or flights, I should say, with Trip.com. It works. But yeah, not sure why they dropped so far here. Maybe it's a highly competitive space. I kind of like it. I think this would be more on the risky side, but I kind of like this one for next week. Of course, we do have earnings coming up, so keep an eye on this. I'm gonna add this one to our list, nonetheless, despite the earnings in Trip.com. And moving forward, the Banco Latinoamericano. Okay, Zombig retrace set up. Okay, dividends coming up also here on February the 26th. That's next week. Let me just quickly see how much dividends this company pays. Just out of curiosity. 5%. Oh, we're going to do a quick 5% of dividend. Well, of course, they're paid out quarterly, I believe. Let me just quickly see. Yes, quarterly. Okay. Oh, it's the first. Oh, that's interesting. It's the first dividend actually that is being paid out in a while for this company. Interesting. Nonetheless, the dividends are coming up, yeah. Potentially something of interest here. Zombig retrace set up, a company which has been in a strong uptrend. Yeah, definitely an interesting play. I'm gonna keep it here just to see just because of the dividend play, that might be a factor here. So, and two more I wanted to point out. I'm gonna skip a couple of these ones here. MasterCard and Visa. All right. So MasterCard, you can see it here, is hovering at this support level here, because like most financial products, it came down a bit, and so did Visa. A very similar setup. This one down here. Also Visa at this support level here, which was broken a little bit in the past, but not by much. We're still hovering here. What I like about both MasterCard and Visa, look at the options prices here. Very low. MasterCard at 2.24% and Visa at 2.53%. So if you're options buyer, if you limit your risk, potentially buying some calls, and either of these two could be potentially not the worst idea. Anticipating, yeah, we're gonna potentially bounce higher again. So this could be a play that could be considered here because the volatility, the implied volatility for these options is low. Therefore, the options prices are low as well at 2.24 and 2.53 here for Visa. I think this Visa is a bit of a cleaner technical setup. I'm going to add Visa to our watch list. All right. And there was one last thing I wanted to point out, which is Palo Alto Networks. Where do we have it? Down here. Also an interesting one. Big drop, just like most computer corporations here, to this key support level with a liquidity capture at the last bar. Interesting. And if you look at options at 5.56, okay, somewhere in the mid-range. Nonetheless, I think this is an interesting setup, anticipating, okay, after this deeper correction from 223 almost down to 148, big drop. Maybe this is the bottom this is going to find, because below that, we don't really have any levels. You can see it here. It's the abyss. So this better hold. That I think to our list. All right. Perfect. So you can see it's quite easy to find interesting trade setups. The one this week a little bit more questionable as last week. Last week I think they were very clean cut. Of course, market conditions change all the time and they change every day. So this kind of scan you can do, in fact, every single trading day after the market closes, not just on the weekend. All right. So let me see if there are any questions.
I have one here, Daniel. What do you use as your sort criteria?
Oh, I just sort by trend duration. Here in MA Rush, I click on this one. You can see this little green arrow here. That means I'm sorting in descending order.
Thank you. And could you please look at BAC? BAC.
Later, I'll do that later. Once we complete our watch list. Yeah.
Sure.
So for all the symbol yeah.
Sorry, how do liquidity captures factor into your scan evaluations?
Not as my primary criteria, but I do look at them for sure because I see them on the chart. Sometimes we've run scans for liquidity captures explicitly. So if I go to this column here, liquidity IQ capture, and say, hey, I only want to see the symbols which right now have at support a liquidity capture right now at this bar, because there's only 11, and Palo Alto is one of them. Yeah, and they're all like bounce setups. Then you can of course also put in the we also have a bullish trend in there. But yeah, so all these ones. Urban Outfitters too, by the way. Also an interesting one. Yeah.
Perfect. And
Down
you're good
to
to continue,
support.
Daniel.
Yeah, down to support here with liquidity capture. Okay, perfect. All right. So let me go back to our watch list to quickly take a look of what we actually found here so we can use my trade notes. So 8 symbols here. Let's see which ones I like best. All right, NBN. I like it for a bounce here, but you never know. Sometimes these corrections within that bigger uptrend can be broader. So if anything, I would go into this one with a small position, just tip my toe on the water if you see the bounce, because these kind of pullbacks they can be deeper. You can see it here; they're not infrequent. Look at trend radar here. Oftentimes you go to level 5 after a pullback. So at your own risk, but nonetheless, I kind of like it for a long. And last trade note here, by the way, we had it at 91 back in May, and now we're at 116. So that one worked quite nicely. And also here, I'm going to add this one to our trade notes. All right. Save. Next one is Walmart. All right. Probably my favorite one so far. If you see a bit of a deeper bounce here, a long trade Walmart, I think it's really interesting. Level 3 pullback. Maybe we're going to see level 4 here, but then this would be, for sure an interesting trade. I would, if you ask me NBN or Walmart, I probably would go with Walmart. That's the cleaner technical setup. All right. Trip.com is next. TCOM. It is earnings coming up. We discussed it at your own risk for sure. It's relatively cheap, so you know. I'm gonna look at the options. 6.15, which is not too bad for options. For earnings coming up at the same time. So that's actually reasonable. Oftentimes when earnings are coming up, options prices are much, much higher. So it's still reasonable for this. But of course, this vol if you're buying calls, just be aware that there's going to be the volatility crush afterwards. The volatility after earnings will definitely go down, so they're going to lose some value on this. So prices may need to move higher than you think after earnings, just to make up for this loss in volatility. Nonetheless, I added it, so I'm just curious what's going to happen with this one next week. So I'm going to add it to our trade notes here as well. Safe. There we go. All right. Brady Corporation, BLX. Oh no, not Brady, Banco Latinoamericano. Yeah, interesting one for the dividends. Uh, I believe it's going to be a quarterly dividend, not for the full year. Yeah, they're paying quarterly if they do. Last one came out at 0.62. So if you extrapolate this, well, because of you never know how much dividend will be paid unless it's already announced. This is actually something we can discuss in our lunch and learn session. If you remind me, Nicholas, on Tuesday, we can actually do some research of what is the announced dividend. It's probably announced already for this symbol. So we're gonna add it just so we don't forget about the symbol to our notes here. All right. Perfect. And Visa. I like Visa for a long play, but potentially with calls or maybe debit spreads. I like the options heat index to be very low, which it is. So this lends itself to buying options rather than selling options. For this, I'm going to add Visa as well to our list. Oh, we had Visa last time here at yeah, back in the day at 322. What? Let me just quickly see. Oh yeah, we're coming down. Oh yeah, we've been hovering, in fact, in this level here. I was wondering, wow, we talked about Visa back here in March last year in this webinar. That was our last trade note. And look, it has been jumping up and down since then. Now we're back down here at this lower level. So yeah, maybe more for a long-term play. Visa has become interesting again. So I'm gonna add a new trade note here. Just wondering, hey, when did we have Visa for the last time? Back in March 2025. All right. Now we have Brady Corporation. Alrighty. Zomic retrace, I like it. It looks like a good setup to me for a potential bounce of this level here. So I'm going to add it as well. Okay. Come on. There we go. And one or two more things. Palo Alto Networks. I'm going to skip this one. It feels to me like almost. I'm still intrigued. If you want to speculate a little bit, maybe a bounce of this level, because look how solid this level has been in the past. Down here, bounce. Down here, bounce. Now down here again, maybe another bounce. Ah. You know what? I'm going to add it nonetheless to our list. Let's see how the market opens on Monday. All right. Perfect. And then we have our last one here. Close, which is the retail ETF. Yeah, this one just is a bit boring. It doesn't move very much. It pretty much looks like the S&Ps almost with the same kind of corrections here. If we come down a bit further, maybe to this level, this could be an interesting long opportunity. But just don't expect too much. It's an ETF. Gains are quite modest for this one. But let's add it as well. All right, pretty good. Some interesting symbols here. I think Walmart and Brady Corporation, probably my favorite ones for next week. Visa maybe for an options play as well. All right. Now, Nicholas, do we have any symbol requests which
Yeah,
we can go
starting with
through?
BAC.
Yes. Let's go back to our Bank of America. All right. Okay, it's probably dropped a little bit too, as all banking stuff did. Yeah, interesting. Well, I like it. I liked it better when it was closer to our support level here, but yeah, that's a good one for potential long. Maybe if it comes down a bit closer to the support level, look for a long there. Yep, interesting.
Oh, sorry, Daniel, was that the end of it? The next one is CVNA.
Yeah, CVNA. All right. Okay, Carvana. Okay, what is Carvana up to? Yeah, yeah, long-term uptrend. Again here. I would wait maybe a bit more, but that's just my conservative way of thinking until it comes down to the support level, then potentially look for a long. I like it.
Thank you. Okay, and then the next one's going to be Tesla.
Tesla. Okay. Okay. Yeah. I mean, it's big. Look where it's coming down to, this key support level. So big drop, huh? Sharp drop off this resistance level here with a bunch of liquidity captures. Interesting, and now trading down here. It was a beautiful long bounce here for Tesla on Feb 5th. We missed it. What day was that? I forgot. It was definitely not a scanning day, which was yeah, it was like in the middle of the week or something. But yeah, if we come down one more time to this level here, 387, this could be a nice value play. Of course, Tesla is much more than just a car company. So I think having this in your portfolio long term, probably not the worst idea. Yep.
Thank you, Daniel. And the next one's DraftKings.
DraftKings. Okay. We went bearish here and now we broke. We lost support. Yeah, this one. Oh boy, let me just see here. What do we see here? DraftKings. Yeah, not the best looking chart to tell you the truth. We went bearish here. We lost support. Now we're pushing higher. A bit of a gap to be filled here. So we might see a retracement back to this old support level, but going long here, too risky for me, even with this gap.
Thank you.
And
Okay, and
Aubrey
then the
and
next one.
Aubrey's well, just a quick comment from Aubrey. With that, Aubrey's one of the best companies to benefit from AI technologies. I don't know, Aubrey. Why would that be? See, that's the beauty about technical analysis is that I don't have to. Well, I barely look at these fundamentals on how new technologies may change market fields. I typically avoid it to keep my life easy. But for sure, if that's a thesis of yours, Aubrey, yeah, even one more uh, check mark behind Walmart for a potential long position for sure. Sorry,
The
Nicholas,
next
go ahead.
symbol is NQ. Did we already look at NQ?
Or the Nasdaq?
Yeah.
We looked at the Qs, yeah, but just be the same thing.
Okay.
Yeah.
And then the next symbol is GIS.
GIS. All right. Okay. General Mills. Bearish for 304 trading days. Yeah. It was interesting here. Didn't we discuss this last time too when it came up to this resistance level looking for potentially put options here? Uh, Now we're at support, so even for a bearish play, I wouldn't do it at this level. As we're hitting support, I would wait until we're coming back to resistance.
Thank you. And finally, the last symbol is going to be CCJ, our favorite.
Kamiko. Say, all right. Who's saying? Who's asking for? Is it Aubrey?
Anonymous. And you can
Okay.
turn off the highlights in MA Rush, right, Daniel? The trend fills
Yes. Oh. Uh.
in the indicator
I
settings.
I don't think so. Not. This is probably something we should add to the dashboard. You can do it in the standalone indicator on TradingView and other platforms, but not in the dashboard yet. But we're gonna note this down. Yeah, I like it. I liked it better a couple of days ago. Beautiful zone break retrace set up here to this level and pushed higher, exactly as we would like to see it. I wonder why we didn't see it on our last scanning session. But yeah, for sure, very nice. But entering now, maybe almost a bit too late, even though of course this whole symbol is extremely bullish. Maybe wait. Well, it may never come, but wait for another pullback towards this level and then go long. But yeah, I like this setup a lot. Perfect.
Daniel,
All
and
right.
then if we have time for one more,
Sure, yeah.
Pfizer.
Ah, Pfizer, good old Pfizer. All right. Where are we here? 6.45% dividend yield. Yeah, and it's coming down a bit. I mean, for Pfizer, we did go bullish here. Of course, this may just be short-lived. A huge drop here, but you never know. Pfizer, one of the companies which I think are too big to fail. They still have the capital power to pay dividends. We're coming off this resistance level. I would love Pfizer to see to come down to this level here at 24. This could be a great value play, especially since they pay dividends so regularly and so highly. Uh, yeah, I like it for a long-term play, not necessarily for swing trading, but it's a long-term holding, especially with the dividend history. It's one of the aristocrats, I think, of dividend payers, which have been paying dividends regularly for many, many years and always either keeping them the same or increasing dividends, never lower them. So that's a quality company, but it would be a longer term play, yeah, as an investment. Not necessarily a swing trade. From a swing trading point of view, I think I would, sell it after a couple of weeks again. Not so much. But if you want to get in now and keep it and hold it for a couple of years, collect dividends and anticipate, okay, Pfizer eventually, you may think, hey, they're going to have a new killer medication on the market, price is going to go up again, then you can double dip and double down on your investment. You're going to collect dividends and the stock price will increase. That's, one thing um, one would hope for a longer term investment for Pfizer.
Thank you, Daniel.
Great. All right. In that case, I will go back to my slides one more time and remind you that if you want to try our dashboard, it's tradingindicators.com/view. The link is in the chat for a full week of a free trial. And of course, if you want to stay on board, we have attractive monthly and yearly options. Also, if you have any questions which were not answered in this webinar, please don't be shy. Send us an email at tradingindicators.com. That's our homepage. Check it out there. Go to support, then contact, and put your question into the contact form, and it will go straight to my inbox. And I will answer every question, or Homa will answer every question personally. And but sometimes it will take us a couple of days to do so, as we have an overflowing inbox right now. So I'm having a bit of a hard time catching up, but I'm hopeful that by the end of tomorrow or maybe on Monday, this will all be done. All right, guys. With this, I wish you all a great weekend. Take some time off and let's see what the market will bring us. Lots of things are coming up, being discussed at least over the weekend, politically, tariffs, whatever it might be. We'll see what's going to happen. Overall, I think we will have a bullish outlook on most things, SPY, QQQ, but also gold and potentially silver as well. With this, yeah, have a nice weekend and talk to you soon. Bye bye.